Καλησπέρα σε όλους. Καλή χρονιά. Το πρώτο Fintech Meetup της χρονιάς για το 2021. Ευχαριστούμε πάρα πολύ για την συμμετοχή σας. Ευχαριστούμε που είστε εδώ. Θα γίνει λίγο και στα αγγλικά όλο αυτό, γιατί έχουμε και κάποιους από το εξωτερικό, οπότε θα κάνω switch και στα αγγλικά από εδώ και πέρα και νομίζω και οι ομιλητές. Έχουμε δύο Έλληνες, αλλά διεθνείς ομιλητές, θα τους παρουσιάσω σε λιγάκι. Ένα πολύ ενδιαφέρον θέμα, το Embedded Finance. So, welcome everyone. It's a pleasure to have you in the first Fintech Meetup of 2021. As part of Visa Innovation Program, we're organizing this Fintech Meetup to explore and discuss hot trends of fintech and talk about fintech in general. And it's a pleasure to have two very highly acclaimed speakers and experts on the field of not only in embedded finance, but in general in fintech. So I would like first to start with George Karamanolis, who will make a short introductory, let's say, presentation of fintech in Greece, and not only in Greece, but the challenges and opportunities in fintech, a high-level, let's say, intro. Then Vicky Fotinou, Program Manager in Crowd Policy, will talk a little bit on the Visa Innovation Program and how it goes and what are the plans for 2021. Now you can see also in the chat the program once again. And of course you can use the Q&A on the bottom of the screen. There is a Q&A functionality where you can ask questions to the two main panelists. So we have Dr. Dimitrios Salabassis. He's the Assistant Professor and Fintech Innovation Entrepreneurship Director in Swinburne University of Technology. He's actually now in Australia. He's in Australia. A long hour. It's quite late there. So thank you, Dimitrios. Thank you, Mr. Salabassis. And we have Panagiotis Kriaris, Head of Business Development, UNSER. He's now in Vienna. So we are very glad to have both of them from different parts of the world and talk about this very interesting topic. So I don't want to talk about embedded finance myself. I want to leave the two main speakers to talk about it, although it's a temptation because it has to do with what 10 years ago this famous article said, Mark Anderson said that software is eating the world, and now we have fintech eating the world. So it's a very interesting point in time for fintech. And George, you can probably start with your presentation, and
thank you, Costa.
Then we can move with the rest.
Thank you, Costa, for the introduction. I suppose you can see my presentation, right?
Yep.
Yes.
Okay. Thank you all. I would like to thank you all from Crowd Policy for your active participation to our third FinTech Community Talks event. An event that is with the main objective to share the experience, the ideas and the knowledge, and transfer knowledge for all parties participating. My presentation will cover a short, let's say, fintech innovation journey in Greece, Cyprus, and the last 7 years from crowd policy perspective. Crowd Policy is an open innovation integration, and technology integration company. We are trying to deliver services in the field of open innovation. We organize hackathons and community activation initiatives in several sectors of economy and society. We support public sector and municipalities in Greece to innovate and utilize IT infrastructure, cloud solutions, and deliver e-government and digital governance services. Recently, we have collaborated with several municipalities. Totally, we are supporting 70 smart cities in Greece and 5 regions with the objective to support digital transformation. And one main topic of the conversation is how to utilize the experience of from banking sector and the experience of fintech sector in general in order for the public sector to deliver personalized services and, for example, to use existing platforms from the banks, let's say know your customer, single sign-on, or even payments, in order to be more friendly for friendlier to the citizens. So we, as Crowd Policy, we are trying to implement services in 3 main sectors, and in parallel we are working with telcos, energy sector, and agri-food sector. And I think the common question from all these sectors is how to use my data, how to run business analytics and programs, how to run loyalty campaigns, and all the payments scenario related to the fintech conversation we have today are in the center of this conversation. Okay, we had a long journey after the establishment of Crowd Policy the last 8 years with implementations, implementations and projects in different sectors of economy and society with prizes, etc. And we hope to continue in that directions and partnerships from the private sector and public sector, and of course supporting the local government and regions to implement digital transformation. Crowd Policy is located at Moscato. This is, okay, that's a photo I took months ago, before, prior to COVID situation. But now, okay, we are operating in a similar way. The half of the company is working remotely. Okay, through this innovation journey of Crowd Policy, one interesting aspect is the human capital and the local human capital. The local human capital and innovation ecosystem we have met and we have supported to be created in Greece the last 7 years. We have organized over 34 hackathons, innovation contests for different sectors of economy, for example, for insurtech, for fintech, for agri-food, for smart cities, or for transportation. We have met 5,000 participants and an interesting, innovative, and creative ecosystem of 3,000 developers. Also included 500 POCs, MVP products, digital products, ready to be deployed in the market if the support from organizations that have impact in economy and society, for example, from Visa, we will discuss for a Visa innovation program, from ministries. If we have this support from these organizations, great things will happen in the innovation ecosystem. Vicky will share information for the development of Visa Innovation Program. It is a program promoting fintech innovation and entrepreneurship in Greece with great partners involved at this journey with banks, public sector institutions, and we support high impact startups from the financial technology sector to innovate and deliver services through Visa network. Okay, this is some photos from the ecosystem we have met. prior to prior to COVID situation. And now we are doing, what we are doing in the field of innovation is that, for example, for innovation and acceleration services, for workshops, and in general for the support of the startups and development teams, we have transformed and pivoted our services. And all these supporting services for the Greek innovation ecosystem now are being delivered through collaborative and online digital tools. For the fintech side of the conversation, Crowd Policy loves fintech. I love fintech. We have, we see that we understand that there are a lot of business cases and opportunities. There are, for example, business cases from the public sector. Gov.uk provides authorization.uk, the national e-government platform, provides authorization and authentication for the citizens using e-banking credential. This is a real business case for the integration of the fintech technology and experience with the government sector. This has been recently implemented also from the Greek government. The Greek gov.gr platform provides authentication and access to the e-government services using e-banking credentials. We hope for more business cases and case studies to be deployed. And fintech innovation programs, as we will discuss during our presentation, for example, the Visa Innovation Program could be a catalyst for this collaboration. And of course, the PSD2 regulation in Europe, where all the banks provide open banking APIs, is a great opportunity for fintech startups to collaborate with the banks, to collaborate with partners, and deliver added value services utilizing account information service providers and payment services from the banks. So there is opportunity not only for the fintech sector. Now I'm sharing a slide relating to COVID-19 impact, but also in vertical sectors of economy and society, for example, the tourism, the agriculture, to benefit from the technology and business collaboration from startups and the banks. So now we are discussing for a new era, not only for open banking and PSD2 and fintech, a conversation of fintech that happening from banks and startups, but we are discussing fintech concepts and business trends and opportunities in sectors of in important sectors of economy. This is an example of the term agri-fintech startups in Asia. I think that we'll see more business cases, for example, tourism, fintech, and so on. Recently in Greece, we have collaborated with two systemic banks to deliver a cloud environment where we have utilized open banking APIs and provide to local farmers a free version of ESOP. This ESOP has been integrated with the open banking API. So this is an example where we can deliver cloud services and cloud infrastructures utilizing open banking APIs and try to achieve real impact for the local societies. Okay, at the technology side of the conversation, we have launched also, except from organizing fintech innovation events, contests, ideas hubs and innovation labs, we have launched the Fintelio X platform, an open finance platform. Imagine is a middleware, a gateway, a bridge a bridge for the banking environment and the society, in order for more fintech startups and business cases to be created in different sectors of economy and society. So we are providing the SDKs, the open banking APIs. We are already collaborating with all the systemic banks in Greece. And I would like to also to introduce also these opportunities through my presentation. Okay, I have focused to crowd policy and what we have did, but I strongly believe if we can connect the dots, collaborate with innovation programs and utilize the open technology from bank side and the vendors, we can build services and collaborate with startups and big organizations. This was the idea of presentations, and I will be here for any questions. I'm sure that our speakers will share the value and the impact of open finance and embedded finance trends. What I have to say is that in Greece, a great human capital and great innovation ecosystem exists, and I think there are a lot of tools and opportunities to utilize. Thank you, Kostas, and I hope I hope it's okay for the
first time. You're fine. You're just yeah,
okay.
10 minutes instead of 5, but it's okay. Thanks, George. So let's move on to Vicky and discuss a little bit about the Visa Innovation Program in action and what do we have plan for 2021.
So cohort, of course, because we
for
are
the third one. Third
cohort, and thank you very much, Kostas, for this. I'm going to share my screen now. Okay. Can you see my screen?
Yes, we can.
Yeah.
Okay. So we're proud to say that the last 2 years, the team of Crowd Policy ran along with a great fintech company, Visa, and Visa partners, the local 2 cohorts of Visa Innovation Program. Crowd Policy has indeed built during the last 7 years an extended startup ecosystem via various open innovation initiatives, implemented innovation labs, more than 31 crowd hackathons and more than 13 accelerator programs in smart cities, fintech, energy tech, green tech, and insurtech with over 500 teams and 6,000 participants. We are proud to say that through innovation program and with this amazing team, which I happily collaborate, we managed to contribute and enable the entrepreneurial local spirit and help startups develop applications and experiences and collaborations for the global market, for business and public stakeholders, contributing to the economic growth and extraction of our economy. The team is also wider, so you can see the rest of the members here. There is a process we follow in order to make Visa Innovation Program successful. We allocate the startups to participate. We organize discovery sessions according to the needs of the startups, and we must make them with the greatest mentors of the startup ecosystem. We then organize meetings with Visa and Visa partners for the use cases the startups have, and our ultimate goal is to build successful POCs with Visa and Visa partners. And of course, not to forget our great mentors. We have more than 35 executives and experts from the financial market, universities, and large enterprises from Greece and abroad. Mr. Salabasis, who is also the next speaker, is one of these mentors. And grabbing the opportunity, we would like to thank each and every one of these mentors. Some metrics from the 2 successful cohorts of the Visa Innovation Program in order to convince all the startups to participate in the 3rd cohort as well. We have organized 60 plus mentoring sessions, 70 plus meetings with stakeholders of the program and Visa. We have managed to build 4 successful POCs, and there are 3 more on the way. We have organized workshops, and of course, our startups have managed to raise funding more than $13 million. We organized, of course, with the completion of the 2 cohorts, a successful demo day in which Visa partners, Visa executives, Mrs. Evdalina Vasileva, the general manager for Greece and Bulgaria, participated, Mrs. Andriana Papa, head of Visa Greece, and a wider audience of the startup and fintech ecosystem. Some milestones for the 3rd cohort in order to invite all of you, the startups, to join. Our open call is programmed on the 1st of February. It's going to run till the 14th of March. And then there's going to be a short list of companies, around 15 companies, which are going to be selected till the 2nd of April. We're going to organize a joint kickoff along with Bulgaria and Turkey on the 14th of April. And then the program is going to run till November 2021. The new challenges, we have screened some 4 new challenges: enabling digital commerce, bringing payment technologies to the next level, SMEs, of course, which is a target for this program, and smart cities, all the apps and ideas which have to do with smart cities and how to build better cities. And of course, without any further delay, I would like to show you our experience so far and ask all of you, the startups who are attending here, to join us, be part of the next cohort of the Visa Innovation Program. Come along, come on board. Let's build the future of payments along with Visa and its partners. Thank you.
Thank you, Vicky. Thank you, Vicky. Great. It was a very nice wrap up of the 2 cohorts, pre-COVID and post, and then in COVID era, going from the physical and the nice environment in Impact Hub where we had our base, then to the Zooms and the WebEx and the Teams and everything. But yeah, I think we have adjusted, and now we will continue in a digital format also for this year, of course. So yeah, thank you for your
yes, in a wider and broader Visa Innovation Program with the participation of 2 more countries and with more fintechs gaining experience from the wider network of Visa and partners. That's the main goal. So join, come on board.
Thank you, Vicky. Thank you, Vicky. So after this intro, let's go to the main topic. The topic is embedded finance, and we have as the starting speech Dr. Dimitrios Salabassis. So it's our pleasure, Mr. Salabassis, Dimitrios, if I may, to have you with us, and you can share your screen and your experience on the topic.
A very good morning, Kalimera, from Melbourne, Australia. Thank you so much for the very kind invitation. Very pleased to be with you and share some of my thinking and research on such an interesting topic, embedded finance, as the next frontiers for a new fintech narrative. To that respect, I see that embedded finance is really around moving things and moving beyond fintech. And within the next 15 minutes, I'll try and share some insights and thoughts and try to capture a little bit the landscape of embedded finance and open also room for discussion later on. Financial services and fintech, as you all know, has moving around massive transformative business models from the embeddedness of smart and data-driven technologies towards data analytics, blockchain, artificial intelligence, machine learning, and basically impacting across the entire value chain and lots of different subsectors of the financial services sector. Taking into account the full notion of digitalization, we're having the emergence of neobanks and digital attackers. We're seeing massive changes in payments and lending. We see lots of changes in digital infrastructure, and more recently around the notion of open banking and the API economy that builds upon the delivery and the creation of ecosystem-driven business models. More recently, and this is also where we're heading with embedded finance, is the introduction and the emergence of big techs taking place within the financial services space and claiming part of what is normally called the stewardship of incumbents. And also one of the biggest challenges right now and changes is what we call as a service business models. So basically a banking as a service, a distribution as a service, an infrastructure as a service, the new as a service economy that tries to create additional layers of innovation, additional layers of entrepreneurship and growth, and create additional opportunities for incumbents and fintechs and big techs. Despite the fact that COVID has really created a massacre around the globe, financial services and fintech has still remained quite stable. Of course, we see a decline in the global funding, and just to let you know, these slides will be available to all of you in case anyone is interested. So these are some more recent data around the global funding that fintechs have received up to Q3 2020, and here you see some additional numbers which really see that we still have an impact, but not much of an impact when it comes to the global fintech venture deals, especially around 2020. The reason why I'm showing these two slides to you is the fact that by reading this data, I understand that fintech is reaching a point of pause, caution, and maturity. Because so far, the fintech 1.0 moving to a fintech 2.0, we have already seen the exposure of a number of business model vulnerabilities. We're seeing a massive shift of competitive dynamics, and we're also looking now into a number of questionable fintechs that haven't been able to scale. And we see a few examples, especially in the neobank space, or some deals and collaborations that didn't go through, and they were meant to be unsuccessful around the globe. And the call for more long-term business model sustainability, and also the fact that funders right now tend to be much more cautious and much more selective around really wanting to see business models that are scalable, business models that are really innovative, and business models that can create a massive and very, very distinctive value proposition. To that respect, we see the fact that customer experience is not enough anymore, is not scalable anymore, and that requires additional elements, additional capabilities, and relationships across the consumer and the overall value chain is moving directly to a digital environment. But most importantly, we see that non-traditional financial players, especially the big techs and companies that normally wouldn't have anything to do with financial services really entering the arena, really entering the competition and provide consumer financial services. And this is very, very interesting. And that's also quite surprising and potentially paradoxical. Therefore, from the one hand, we've got a customer experience which has been at the locus and the DNA of the whole fintech innovation, moving ahead towards more scalability, more growth, and also the introduction of additional players in a field which for many is already considered very much populated. Now, let's put a little bit of context around on what embedded finance is. So for me, embedded finance encapsulates 5 key areas. The first one is the integration of financial services into non-financial services provider solutions, basically providing a full suite of financial offerings by non-financial organizations. And these particular services and offerings can be done either on a checkout or on a point of sale experience. For example, you are buying something and then at the end, you may be given an opportunity to finance that or have an insurance for a particular product or service, or have a card that you're able to receive points. Furthermore, that opens a broader portfolio that opens up to an augmented customer value proposition and diversification of a revenue stream. And also that leads to more interconnectedness. And I think for me, the words integration and interconnectedness are the most important aspects in embedded finance, because it's really around connecting multiple fields, multiple domains, connecting data, connecting systems, and creating also seamless customer experience. I think this is where the overall notion of a fintech 0.2 or how I want to call, or how do we call it, embedded finance is really grounded on. And I'm sure Panagiotis will provide additional and more hands-on information on his presentation a bit later. So the landscape on embedded finance has normally 3 key pillars, but I think I have added 2 more. So we've got the providers, which are the service providers that really create financial offerings into platforms and enable the increase of distribution and improvement of customer retention. We've got the enablers that provide what we call a data infrastructure and connectivity through APIs, and banking as a service platform. And also we have the containers that really offer platforms that aggregate financial services across providers. So basically allowing the customers to access a range of solutions in a frictional manner. Now, I have also distinguished a bit containers and aggregators, because we also have the aggregators who are primarily around creating the notion of additionalities around data potentialities, and I'm happy to discuss that later on. And also ecosystem orchestrators, which I think for me is at the full front of embedded finance innovation around creating ecosystems, creating interconnectedness among ecosystems and hubs, and really having what we call ecosystem-driven business models. Now, a few examples of embedded finance that we can see. We've got, for example, e-commerce, food delivery, utilities payments, insurance products, transportations are only a few mere examples of the potentialities of embedded finance. For example, Grab, which is the Singaporean version of Uber, is offering through a single app. So it's an app-based integration accessibility a buy now, pay later, micro investment, consumer loan products, and normally this is normally a taxi service. Therefore, again, we're looking into a one-stop shop point of sale platform. This is the business model behind embedded finance. A few other examples: Amazon, Amazon Pay, Amazon Lending, Amazon Card, Shopify, Capital, Pay installments and balance. Uber is offering money and card, but I think, as far as I know, they have backed up a little. They have pushed back a little bit. And also Apple, they offering also the Apple Card. So you see, all these players that normally have nothing to do with financial services are actually offering financial products and offerings within their portfolio of services. Some data that were published quite recently, they really show some sort of a growth potentiality of embedded finance. As a forecast here, we're looking approximately of 235 billion by 2025, the forecast of growth in embedded finance, which is really interesting to see, particularly in the areas of payments and insurance and consumer lending. And insurance is quite interesting because at the moment we haven't really seen a lot of cases when in insurance, and there is a lot of questions around, is insurance basically the next frontier of embedded finance? And keep that in mind, because this is going to be one of the questions that I have posed at the end as my closing part of the presentation. And also here we see a few examples of partners. Primarily you see payments and lending are at the forefront and cards of innovation and embedded finance, whereas insurance, compliance and are more at the low end, and we don't really see a lot of cases at the moment, but you see some emergence around what kind of potential cases to see. So you see it's a really an emerging space with based on many, and I think also based on my research, a lot of potential for the future. Of course, now we've got the incumbents, the fintechs, the big techs, and this is all around strategy. This is all around ways of capturing the new notion of data potentialities, the values of data, the ways of structuring enterprise architectures. Therefore, we see a lot of movements from mergers and acquisitions to strategic partnerships, to strategic investments in fintechs, to internal transformation, both from incumbents, but also from big techs. We see lots of big companies, with the latest example of Walmart, that they build their own fintech accelerator program, really building a fintech capabilities internally, providing also services to fintechs. And this is more of the banking as a service business model. But we could also potentially see some that they do nothing and basically they choose to ignore. And that is mainly because are primarily protected by regulation. Therefore, they're not that worried to that respect. But I think we don't have many examples there. For me, what is really key here, as I said, the word ecosystem is really key. And I think we're moving into a space where trust, innovation, and collaboration go hand in hand. On the one hand, we've got the incumbents that are considered to be trustworthy, are considered to have this reputational strength. On the other hand, we've got the fintechs and the big techs that, especially fintechs, they don't have the legacy systems, they don't have these bureaucratic lags. We've got the big techs who have massive, primarily data capabilities and data analytics and technological capabilities to provide and really contribute in the creation, in the delivery, and in the dissemination of value. Therefore, for me, in order to really see the reality of embedded finance, we really need to bring all these players together, and we really need to see the fusion of collaboration among incumbents, fintechs, and big techs to really see the next generation of financial services driven by entrepreneurship and innovation. This is where I really think that the future is moving ahead. Of course, with different peculiarities according to the strategic orientation of many players. However, I think collaboration is a must, and I really think that the strategic expansion of an embedded finance ecosystem is driven by collaboration and partnerships. And this is also interesting because some recent data that were published later in 2020, they see that primarily big techs, the role of big techs is really driven by being suppliers and aggregators, but we also see that they will potentially compete equally with banks and fintechs, but they will also dominate but still be dependent. And that raises multiple questions around the role that incumbents are going to play in the future within that embedded finance regime. So open banking, which I'm sure you are all aware of, and I'm not going to spend any time on that. I will only say that for me, open banking is really opens the ability to share data in a common structure and to really unlock innovation in the fintech and the broader financial services sector. Really opens horizons for thinking outside current business models. Is really around in the notion, grounded in the notion of interoperability and interconnectedness as the keywords that I used before. It's really opening up to the fact that this is not only about pure finance. This is not really about pure financial services products. It goes into other sectors, from energy to retail and so on. It's really around, it's just the beginning of data interconnectedness and exploration of the potentialities that data create. It's really the integration, as we said before, and the fact that creating seamless experiences, creating customer experiences that can be scalable. So therefore, again, notion of collaboration and the embeddedness in finance is really the new value that is created. Therefore, a number of future trends that I have seen through my research, I think for and foremost is digital identity, especially biometric authentication. And we've seen that quite a lot now with the whole situation with COVID-19, that we're looking into new ways of capturing data. We're looking into new ways of understanding compliance, understanding ways of being compliant, and also that at the same time creates a lot of cybersecurity data breaches and ethical data governance issues. Contactless and voice-activated commands for payments is something that has been vastly discussed, and we see a lot of innovation taking place right now. We see a lot of emergence in the digital-only banks, the neobanks. They're really trying to push ahead and create new business models that are really scalable. And also the big discussion taking place right now also in Europe is around the money, particularly the central bank digital currencies, which I think is something to come later on, but definitely has a lot of input, will have a lot of input in embedded finance. So really, from an outlook point of view, we're looking around the digital transformation, but also looking at it from a point of risk, from a point of reputational, legal, and financial issues, and understanding and reconceptualizing the notion of risk. Really, open banking and the API economy, it's really there to create the value from an ecosystem point of view. Understanding, and this is really key to remember, that for and foremost, the customer journey is no longer under the stewardship of incumbents. The customer journey is basically is not owned by anyone per se. It doesn't mean that a single incumbent or a fintech or a big tech needs to be part of the overall customer journey or the overall value chain. So it's really, really interesting. We're going to be seeing a lot more to that respect. Again, harmonized approaches from a regulatory point of view. Regulation is really, really key here, and we're going to be seeing a lot more interventions taking place in the future. And also operational and cultural challenges, which go around the skills, which go around the culture, which go around the strategic planning, which go around the change that particular incumbents need to go through. And finally, questions that arise, and this is part of my reflection and thinking, is also what will be the role of incumbents within embedded finance, how their role will evolve, how they will collaborate or even exist within the embedded finance. What are the changes in competitive dynamics, and also particularly what is the impact on the margins and the profits? Where does the locus of innovation happen? In which industries? Where are we going to see the emergence of the most exciting and the most promising business models? What is beyond payments and lending? Is it insurance? Is it wealth management? What is it really that we're going to see beyond payments and lending? A lot more to see around regulatory requirements and how, for example, they are crafted for non-financial organizations. We have seen a few examples, especially the Ant Financial, which I think it's called now Ant Technology, that they were also accused for a potential regulatory arbitrage because they changed their name. Also, the whole discussion within what's happening with Libra, and I think they have also changed their name. I don't recall how they've been rebranded now. And of course, more questions around deployment, new talent creation, and also interconnectedness, global interconnectedness of systems, global interconnectedness of data inflow and outflows. These, I think, are some questions that are currently seeking answers based on my reflection and my thinking. So for me, it's a long way to go ahead. This is not a sprint. This is, I would say, more of a marathon, but it's definitely a lot of room. And I think we're still scratching the surface, and there's still a lot more to explore and see with the emerging embedded finance regime. Thank you for listening to me, and I'm looking forward to discussing later on.
Thank you, Dimitrios, for your excellent presentation and very good questions in the end. The set of questions that you presented were very to the point. And actually what you said is, we're still scratching the surface, as you said. It's just the beginning of the age of embedded finance. Yeah, we would like to discuss a little bit more afterwards. Let's go to Panagiotis Kriaris, and have his thoughts and his presentation on the topic, and then we'll have the Q&A.
Thank you very much. Let me share my screen. By the way, very interesting insights and very valid points raised by Dimitrios. Can you see my screen?
So from Australia, we're going to Vienna. And thank you, Panagiotis, for joining.
Yes, we can see your screen, please.
Yeah, we can see. Just if you put it in the presentation mode. Yeah, perfect.
Okay, so thank you very much once again. I think that's a very valid topic to discuss. As I said before, all the points are very valid. I will probably repeat some of them. So I will make sure that I don't spend much time on the points that were already mentioned. I wanted to start with somebody that actually I think Kostas already mentioned before. So we used to see many years ago that, and there was a saying that every company will be a software company. And now I think we have gone to the other kind of edge, and we are now saying that, or many people are saying that every company will be a fintech company. And actually, this has a lot to do with embedded finance. Actually, this is what this is about. And I think there was a definition what is embedded finance, and actually the definition says that this is integrating a financial service or technology in a non-traditional environment. And I would like to start with an example. So let's assume, and I think all of you have this experience, let's assume that you want to take a taxi, and it used to be the case that we could take a taxi only by hailing a taxi at the street. Now, a few years ago, you have all these services like Uber or like TaxBit, for example, in Greece, which have been quite helpful. So imagine it's all about the user experience. Imagine if you take a taxi. So for example, you have the Uber app, you call the Uber app, everything is going well. At the end of the ride, you cannot pay, at the end of the ride, you have to kind of bring out cash and pay by cash. Imagine what could do this to the user experience. So now I think it goes without saying. I remember myself a few years ago in Greece, actually in Athens, visiting for Christmas, that Bit, they had not integrated at the time the payout function. So everything was working, let's say, in a seamless and electronic way. And at the end, the user experience said that you have to pay out by cash. So actually, this was kind of contradicting the whole notion of having everything online. So this is what all is about. It's about user experience. I think Dimitrios has already mentioned a few of the examples. So we mentioned, for example, Shopify. Actually, for me, Shopify is a very interesting concept because imagine, I'm sure everybody knows what Shopify is doing. Actually, they are setting up, let's say, e-commerce stores for merchants. So actually, imagine if you're a merchant, you have a shop with Shopify, and then, of course, you need an account. Why do you have to go outside of Shopify, apply for an account, spend I don't know how many days and how much documentation in applying for the account if Shopify can provide for this? So Shopify has a function called Shopify Balance, and actually this is enabled by Stripe, which is another provider that has announced, I think a few days ago, recently, let's say a few weeks ago, that they are also going on this embedded finance concept. So we have several layers, I would say. And then below this, you have an additional layer. So for example, you have Shopify. Shopify is offering this functionality, or let's say this service, that their merchants can have accounts through the service. Then you have the Shopify Capital, which is actually lending. So imagine that Shopify can give you a loan if you're a merchant. So this could be like a working capital. Now, Stripe, which is a payments company, is going one layer below this, and they're enabling this for Shopify. And in turn, you have Goldman Sachs enabling Stripe. So you have three layers, and all these three layers are actually providers of embedded finance. And I would say the concept here is banking as a service. So imagine you have a bank with a license. This is the primary provider of services. Then you have Stripe, which is actually a payments platform, and they are actually enabling their customers, which are companies like Shopify, to enable their customers, which are merchants, to provide the service. So imagine how many layers you can have and how complex this model can be, but at the end of the day, it has to do with added value. I think Dimitrios mentioned other examples like Apple, the Apple Card. Again, you find here Goldman Sachs, Google, Grab, which is, let's say, the Asian equivalent of Uber. I mean, it started like this, but they have now, they have become a super app. And I think they have managed to have funding of close to $1 billion only 2020. And I think starting 2014, these guys have actually $9.7 billion of funding. So if you think of the amount, it's crazy. I mean, for a single company that started as a cab, as a taxi service. More use cases. I will repeat myself that this is all about the user experience. So imagine, and this was mentioned, flexible finance at the point of sale. So buy now, pay later comes to mind. And this is actually about the checkout process. And this is why all these companies so far have been very, very successful. So you name Klarna, you name Affirm, you name all these companies. Payments embedded into a taxi app. We mentioned before Uber. On-demand car insurance when hiring a car. So imagine all of us have faced a situation where you have to rent a car. Why can we not have an insurance coming with the app? Travel insurance, the same. Health insurance when you visit a doctor. Mortgages when you buy a home and everything is online and you're using an app for this. Or for example, when it comes to business, you have a credit line inside the platform. All these can be quite good use cases for embedded finance. Now, I think Dimitrios has mentioned a number. I mean, you have different numbers circulating in the market because of this. That's a different forecast I have, but this is actually for 2030. So this is in 10 years from now. And for me, it's very interesting, the comparison. So today you have the top 30 global banks and insurance, and they have a market value of 3.6 trillion. And the market value of embedded finance, be it insurance, lending, or payments, in 10 years from now, it's going to be double than this. So if you even contemplate about the notion, it's huge. I don't know if this is going to be even come close to this number, but the fact that we're even discussing that this can be true, I think gives an indication of the potential. Now, why embedded finance? Let's say that I'm a company providing services that have nothing to do with financial services. So why should I go into embedded finance? I would say I see 6 reasons. The first of all, it was mentioned before, it's a user experience. So the user experience is the king, is the number one. Everything's about user experience. If I go back to my Uber example, imagine how much the user experience is suffering if I have to pay by cash at the end of the ride. So that's one. Seamless integration. Everything has to look like that it's only one sequence. The customer doesn't care how many companies you have in the background, but it looks like that you have one service and everything is working flawlessly. Brand loyalty. I mentioned several examples. If I am at Shopify or at Stripe or at Uber, I am a client of Uber. So the Uber is facilitating me to get additional services. Sometimes this might be white labeled, sometimes it might be not, but at the end of the day, this is the entry point to the experience. So this is enhancing the brand loyalty I get. Additional revenues. These companies are also going to get revenues from the pie. So imagine that, so this is becoming quite interesting. Data, today is all about data. So imagine if you are, at the end of the day, owning the data and all the potential that you can do with using this data. For example, we discussed about Amazon. So Amazon has now gone into lending. And this is again an embedded finance example. How do these guys are making the assessment that somebody can take, for example, that the merchant can get, I don't know, 1 million or 100,000 euros of lending because of the data that they collect. So actually the data is a currency that has become valuable and you want to get this data. So embedded finance is actually allowing you to get this data. And then last but not least, I would say the customer retention. So you're locking up the customer through additional services. So the customer doesn't want to go away because he doesn't even have a reason to go away. You are providing, for example, if you are a tax, we said before, you are providing everything in the end-to-end. So why should I go and try to find something else if everything is provided into this service or into this global app that I'm offering? How? So let's take the example that you don't have the embedded finance. So that let's try to think what it would take before embedded finance to even build a service that meets the standards of offerings that you have today in the market. So first of all, if it comes to financial services, of course, you have to have a license, banking license, payments license, whatever. Then you have to have a core system, database. Then, of course, you have to you want your customers to be able to do payments. If you are in lending, you want to use data so that you can do the credit assessment. You want to be able to comply with regulation. You want to be in a position to manage fraud. And of course, you have the user experience. If you take all these elements, actually embedded finance or banking as a service, which is a concept that we will introduce in the next slide, actually, it's only the user experience that the company has to bring into the table. Everything else is taken care of by this new model. So just to give an understanding what is happening in the background. I mentioned before the banking as a service because actually banking as a service is the concept that is behind the embedded finance. Actually, I would say that they are concepts that are kind of meaning the same thing. So actually, banking as a service is the setup that is facilitating the embedded finance concept. So at the bottom, you have the banking capability. So you have different sets of partners who have a license or not. Then you have the API infrastructure, and this API is an old technology that we are using in the last many years. We have found new ways of using this in the last years. So basically, this is the so-called API economy or the APIization of the financial services. So this is an additional layer in the middle that is connecting the two sides. And then you have the embedded finance actors. So it can be companies in the retail or the e-commerce space. You can have airlines, you can have hospitals, universities, logistics, fintechs, whatever, you name it. So I think we have mentioned so far a few use cases, and we have many more. But this is actually the banking as a service or the X as a service that Dimitrios mentioned. I think this is basically the concept and the setup. And if you want to elaborate on this concept, I would say that you can find different models. I think this is a good slide explaining the variations of the model. So let's say, for example, the first one is the full stack infrastructure. So these are providers with a complete stack of functionality, and they are kind of providing the end-to-end experience. So they're offering the core transaction processing, compliance, relationships, customer service, everything. That's one. The second one could be that you only have focused solutions. So you have firms providing individual functionalities or vertical solutions. Maybe one of the most famous is Blade. I think everybody has been hearing a lot about why Blade has brought the deal with, has broken up the deal with Visa. That was announced maybe a year ago. And there were many kind of, let's say, ideas behind why this might have been the case. But if you think, I mean, if you let aside the reason for this, imagine a company doing a very simple thing like Blade, having a valuation of 5.3 billion a year ago. Now probably it's much more than this. And what these guys do, they're essentially working in the background of all the well-known applications in the B2C space, connecting data. So all the applications that are very, Venmo, for example, all these applications that are very popular nowadays, they are getting the data based on which they're building their functionality through Blade. And this is especially the case in the Americas, where the open banking is not so advanced as we have it in Europe. So that's one example of a focused provider adding value, but not so many people are aware of the name only because they are acting in the background. Then you have the backing plus the software. So you have banks, they have a license, they're renting the license, and on top of this, they also have the tech stack. They have the platform. So basically, they have the combination. BBVA is a good example of this, I would say. Rails Bank is another example, or Solaris Bank in Europe. So these guys, as I said, so they are providing banking and software. And then you have a fourth category, which is the banks themselves. Actually, I would say this is not even, this is a standalone. This cannot work on its own, but this might be a new opportunity, a new business case for traditional banks, what to do with their license. So what these guys are doing is that they just provide the license. And we all know that without a license, it might take years to have a license. It's very costly to maintain. So these guys are just putting the license, working with other members in the value chain so that they make this happen. So these are the potential, let's say, business banking as a service models. Going back to the notion that every brand or every company can be a fintech, that's a very interesting. I would say that let's take a look at the various scenarios how every brand can be in fintech. So let's say that you have the digital and the traditional companies, and you have the finance and the non-finance. Let's start from the ones that are traditional and non-finance. So Ford, for example, or Best Western, the hotels, or Telefonica. What these guys have is that they have loyalty, and they want to have loyalty in new revenue streams. They used to be serviced by banks in a white label model, so they have a quite traditional model. Now, you can go to the digital applications like Uber or the platforms, Uber, Amazon, Facebook. So these guys, they have a big customer base. They want to have loyalty and new revenue streams. But for them, it's very important to have a pay-as-you-go model, which is something that the banking as a service or embedded finance model can provide, plus real-time open APIs information so that they have real-time information. Then you have the fintechs. So these are all the companies that are digital and are into finance. So all these companies, many of these companies have started off using a banking as a service functionality so that they can provide the core product. So this was a product that they didn't own. And then when they saw that the business is growing and is evolving, they said, okay, maybe now it's time to get a license. But actually, this was the starting point and the basis for what they were providing. And I guess a lot of these companies were into payments or into accounts as an initial application. And then you have the traditional banks that they are lacking, as I said before, they are mostly lacking the infrastructure and the APIs and the platforms and the capabilities to act as a provider. But what they could do is that they could themselves enable their functionality and their offering by adding on top additional services from this banking as a service or embedded finance model. Or, as I said before in the previous slide, they could be acting as providers themselves using the license. So basically, there is an evolutionary process. So if we look at what was happening 10 years ago, you have brands. Now you have digital brands. Some of them are now embedding financial services into the propositions, as we have seen. In the future, it can be the case that every brand might have bits and pieces of something that might look like a financial services offering. So this is how the concept of every company can be a fintech company can be kind of explained, I would say. Last thing, I want to mention the implications of this. So first of all, the first one and the most important is that financial services are becoming, because of this, a commodity. What does this mean? Financial services, now they will have a tendency to act in the background. So you don't understand that you are getting a financial service, but this is happening. So I'm paying for something, I'm getting a service which is called payments, but I don't realize it because everything is happening in the background. And this means that the providers themselves, they have not such a strong brand as they used to have before, and there might be pricing pressure. The second is that you have new business models. So imagine that you have new players and you have new concepts. So you might have new business models potentially involving industries that were not a common, let's say, matches in the past. Of course, you have consumer benefits. So that I think the consumer at the end of the day is the one that that benefits the most from all these developments, because he has more choice, more convenience. Pricing is improving because of the competition, so that's good for the customer. You also have, because of the fact that I mentioned before, of financial services becoming a commodity, you also have a shift in profit. So imagine that you're now having players like we mentioned Grab or like Uber. So these guys are now taking a cut of the pie. So that means that somebody else has to earn less money. You, of course, have new investment opportunities. So this is a good thing for investors, especially, let's say, VCs or other investors, even private investors, I would say, because you have new capabilities. So instead of being in a position to invest in a company that has a standalone business model that is going from A to B, now you have a company which can have a business model which goes from A to Z, only because they have the potential of integrating additional services that many years ago were not even a reality. And of course, regulation is something that we are going to be seeing more and more, because you are now having a situation whereby non-licensed companies are being the providers of services that at the end of the day is the most regulated market in the globe. So I guess that the regulators want to, as this is becoming more of a phenomenon, I think regulators are going to be employing additional scrutiny and trying to understand how they would like to regulate these new players, especially the platforms, I would say. So these are valid. This is mostly food for thought, because these are going to be things that we will be discussing in the not so distant future, coming as a result of this new reality. So thank you. That was all. Happy to discuss connected topics and questions you might have.
Great, Panagiotis. Thanks for the fantastic presentation. Especially the last slide, I think, provides lots of interesting topics to explore more, the regulatory issues, the whole pricing and customer ownership issues. There are different directions that we need to, explore further. Maybe we can see if there is any question from the audience or anyone who would like to say something on the topic and take some notes on it. Otherwise, I would like to ask both of you on.
Well, let's say, Kostas, Debbie here. If any attendee or participant would like to make any questions to our panelists, please use the Q&A tool or make your question to our chat, or raise your hand if you can talk. I can let you talk and make your question. Thank you.
Yeah, we have also this more live and more direct capability, if you would like. Anyway, it's a meetup, so we could be together physically, but unfortunately we are on Zoom. But anyway, both showed us both what embedded finance means and what are the prospects and which are the main components. So I would like to ask both, where do you see, because there was a slide of this growth in the future, I think Panagiotis mentioned. So where do you see this growth coming from? Which are the buckets of opportunities that do you think it's going to be more greenfield, new cases, or existing cases which will be which will penetrate more the market? Where do you see the the main driver of this growth coming from?
I mean, I can start answering, and then maybe Dimitrios can comment. Yeah. So I see this coming from two ways. I think that we're going to have lots of use cases coming from experiences as we know today, but embedded in a different environment. And what we were seeing and we were mentioning as examples before are, for example, so let's say that you have players who want to offer services as part of their own customer experience. So I think this is going to increase the value of what they can offer. So this is going to increase the pie of the offering. So imagine, for example, what we mentioned like Stripe or Shopify. So imagine if all of these merchants on these kind of platforms, if they take, I mean, even 50% of them or even 20% of them, if they take lending or if they take an account or if they make payments, imagine how big the pie can become. That's one. And I think the other one is that you're going to see new business models and new use cases with combinations of industries that were not, let's say, the first ones to think of a few years ago, but now they will be the case. So I think this is now something that is in progress. But I think a lot of this added value, so going from the 3.6 trillion to 7.2 or to this 200 billion that Dimitrios mentioned, depending on the definition, is going to also come from them. And the investment that we're going to see, so the money that we're going to see invested in this kind of opportunities from various investors, from VCs, from mergers and acquisitions, I think it's going to be tremendous in the years to come.
I didn't see agrofintech in your presentation, which George likes a lot. So, yeah. But it could be.
No, I'm sure this is going to be the case. I mean, I don't have so much of a focus on this. That's why I didn't use this as an example. But I'm sure that there will be use cases for this, because at the end of the day, whenever you have a life cycle which is not 100%, which is kind of broken, I think, and there is a gap, I think you have the opportunity to embed financial services in any of these products. So for sure, agrotech is something that will be relevant as well.
Dimitrios?
I fully agree with Panagiotis. So in my eyes, I think the first wave of embedded finance will be really around existing use cases and companies pursuing strategies to deliver more tailored solutions, manage risk in a better way, and also increase customer retention. But on a second wave or on the next tier, and also taking into account that more the data-driven technologies will mature, we're going to see a lot more capability around data connectivity and data analytics, which will provide more live feed and more live management and clustering of data. There, I think we're going to see additional cases which probably we still haven't thought of, and more in connecting probably industries and infrastructures that we haven't even thought about. But that requires more of more solid data capabilities, which I think now we're still not in we don't have that capability yet. But the more these technologies emerge, more around the blockchain, the artificial intelligence, machine learning, quantum computing, 5G, this is going to create more connectivity, and there we're going to see, I think, a more massive influx of cases. Imagine, for example, the cases of smart contracts connecting multiple data sets and creating that level of embeddedness.
Yeah. And what do you think? Let's talk a little bit more about the traditional players, the incumbents. How do you think they will be positioned in this new environment? I mean, they can do both. Ideally, they want to own the customer. But do you think they will achieve this in this kind of landscape?
Maybe my answer is naive, but in the future, I don't think the customer will be owned by anyone. I think the customer will decide basically, it will shop basically any kind of financial service offering that he or she wants. And as Panayotis mentioned, the customer doesn't even care who's behind that. So I don't, in the customer journey, I don't see ownership by anyone. But if we go back to banks, I don't think banks will lose the fight easily. I don't think it's a fight here. I think it's a more of a co-creative approach. Therefore, yes, we see pressure now in the banking sector. We see a lot going on, but I don't see a world of financial services without banks, at least in the midterm, and that's my prediction. Maybe I'm wrong, but yeah, and I think the systems are so well put with so many issues there that I don't see a world of financial services without banks or incumbents. And also taking into account that we still live with population that is used in this kind of systems. Therefore, we're living with populations that only tech savvy. So we have always to take into account that we can't jump into things leaving populations behind who are not able to follow, because all these embedded finance use cases are primarily for people who are tech savvy, and there is a lot of majority of population in the world is not tech savvy, not taking into account the populations that don't have access to such services and so on, which is another big discussion. Therefore, we always have to take into account that yes, innovation is leaping ahead, but on the other hand, if you don't have the customers to actually use this kind of services, it's meaningless.
Yeah. Panagiotis, what's your take on this? Do you agree?
Yeah, look, I think that's a very interesting question, because for me there are a couple of things. The first one is that I agree with Dimitrios that banks will continue to exist only because the model that the job that they are doing is not easy to do. So you have a license, you have all these compliance capabilities, you have all these fraud capabilities, you have the risk capabilities. They have to continuously prove that they are in a position to do what they are supposed to do. All this comes at a great cost. So you're going to continue having this. At the same time, I think they have to adjust to the fact that they're not going to be the ones owning the customer, or they're not going to be the ones owning all the products that they're offering. And the sooner that they realize that this is a new world that is coming and they don't have to own everything, the better it is for them. If you take a look, for example, at all these products that the big techs are offering, or the embedded finance, there is you will see that everybody is working with a bank. So let's take Google, let's take Amazon, so everybody is working with a major bank on the one hand side. Correct, everybody. So they're not interested in doing this kind of business because it's too costly for them. The margins are quite low, and they don't have any interest in doing this business. On the other hand, you have some, I would say, smaller banks, and I think these smaller banks, they have an opportunity here to adjust and to create new business models. So for example, if I'm a smaller bank and I want to enlarge my portfolio, why don't I make a cooperation with a technology company, provide my balance sheet, and in return, what do I get? I get information, let's say transactional data coming from the customers. So I get additional information to do the credit assessment. I have a lower NPL ratio. So that means that I have a lower cost. I get additional business, and I get additional better business. But the question is, am I, let's say, ready to go in this kind of business? Have I understood that things are changing? Am I moving quickly enough to adapt to this new reality? I think this is the question mark for many banks and for many organizations. I think we're going to see many of them failing to adjust to this new reality, only because they think that if I don't build the product on my own, which might take, by the way, a couple of years' time, and in this time the market might be completely different, I have nothing. So this kind of concept, I think, has to be let go of by the banks. The ones that are going to realize and adjust to these models are going to survive. The ones that are not going to do this, I think, are going to be replaced by the ones that can adjust to this new reality.
Yeah, you're absolutely
can
right.
I say something? Can I say
something?
Yeah,
Dimitrios, please. Yeah.
We also have to remember, and I fully agree with what Panayotis said, that customer trust plays a very foundational role in this kind of discussion, and also take into account that in the banking sector, customer stickiness is quite strong still. What it is important for banks to consider is basically what are the unique capabilities that they have, such what Panayotis mentioned about the license, about all these key areas that they cannot be easily replicated, and then decide what kind of partnerships and what kind of additional interventions they need to make, but realize primarily that they don't have to be across the entire value chain and the supply chain, that's for sure. But we have to consider that customer trust is a very key issue, especially in times of crisis. Therefore, and I don't know what is happening in Greece or in Europe, but in Australia, we see a big influx of consumers staying with traditional banks and not going to neobanks or to fintechs because they trust them that they will manage, especially in times of crisis, which is very, very interesting, even from a sociological point of view to look into. So customer stickiness is a very, very big area to explore.
Although I would like to mention that this is the case, so I think we have seen that post-COVID, the customer stickiness to the banks has increased only because they want a traditional, let's say, basis. But on the other hand, if you compare this with the level of trust that they place not to the neobanks but to the platforms, you might see there that there is an opportunity. So if you ask the customers before COVID, if you trust more your bank or the platform, and I mean there might be a few exceptions like Facebook, for example, because of the way that they are managing the data, you would see that there was a higher level of trust to some of these platforms only because they were providing end-to-end services. I think this has started to change a bit based on what Dimitrios has mentioned because of COVID, but it would be interesting to see how this is going to evolve. I think there's an opportunity for both.
Mm-hmm. And of course, taking the startup perspective, if you want to address to the startups, to potential startups, how to navigate this new environment, what would you suggest? I mean, there are different layers, and of course, there are different kind of entry points to this ecosystem, right? So, what is your suggestion to entrepreneurs in this, this new market opening up?
Dimitrios?
What I'm always saying to my students, to all the entrepreneurs that I'm working on, is basically be realistic. Be realistic, not that you cannot dream and go wild and go bold, but also making sure that you know in the industry very well the industry that you are being involved in, because this is a highly regulated space. I would say extremely highly regulated, and we're going to be seeing a lot more regulation. Therefore, it's really important for new venturers to understand what does it take, and if really their business model makes sense for scalability. And thank God we have now lots of tools, and also regulators are becoming a lot more open with regulatory sandboxes and all these amazing stuff that you guys are doing, and similar cases all over the world. So, but I really think that, and again, some of these are only speculations, but I really believe that, well, entrepreneurship and innovation will always be there. It will never cease to exist. It's just a matter of really finding that niche and making sure that you've got capabilities that you can leverage, and also build strategic partnerships. Don't go as initially all the fintechs wanted to go, as cowboys and destroy the banks. This is not happening. This is not going to happen, and we've seen that, and we keep on seeing. So making sure that realistic goals, scalable business models. I don't want to see, for example, another application. I don't want to see another cryptocurrency. I think we have enough. We need to see scalable business models, personally.
Great.
If I can add to this, yeah, I would say that for me there are two things. The first one is that, of course, you have to have a team. Always the team, I think, comes to the forefront. I mean, without the team, even if you have the best idea, it's not going to fly. So that's the first thing that everybody is looking at. The second is, I think you have to have added value. And the third is that you have to know your business. So maybe you to have a niche market. And I think based on what we discussed today, is easier than ever to get the tools to implement your idea. I mean, you don't have to get a license, you don't have to get the servers, you don't have to get the KYC, you can rent everything. So you can test your idea in a matter of weeks or months, let's say, and see if this is adding value. And the fact that I mentioned before at the beginning of the presentation, I see very interesting. You see that there is space for 3 layers of players in the same business of embedded finance. So you're starting with Goldman Sachs, then you go with Stripe, then you go with Shopify, and everybody is playing in the same space. So meaning that if you have a good idea, and if there is a gap in terms of user experience, it might be 5, it might be 6 layers, but the market is going to be there. If you would have told me that you know, everybody's offering the same product and they're still positioning it as a different service to their clients and going beyond and beyond, I could have said that this is not doable. But practice shows that this is the case. So I would take some ideas from this, because I think if you understand where the real added value lies, considering the niche, so knowing your market as and your business, as Dimitrios mentioned, I think there will be opportunities. And nowadays, I think it's more than ever, easier than ever to try out an idea and see if it's working. You don't have to build everything and spend 2 years before asking a customer, do you like it or not? That's for me the key benefit of what we can have today.
Perfect. Yeah, exactly that. Dimitrios, if you have any final note from Australia or your perspective there, or I think we can wrap up our discussion unless there is something.
I mean, look, this has been a fascinating discussion, and this topic is really it has so much room. And
yeah, we can discuss for hours on this topic.
We're just scratching the surface. I think we are seeing a lot of examples globally. Australia aims to be at the forefront of innovation. They're taking very solid steps. They build a regulatory system which allows, through the consumer data right, the open banking, the regulatory sandbox. So they're gradually putting the tools together to support the growth and support all these mechanisms, and understand and capture the value and the potentialities of data. What I would really love to see more global interconnectedness of venturers, and exchange of venturers, and exchange of usage of data. So I think for me, this is when we talk about fintech and embedded finance, I think for me, this is the next step, to really see global collaborations of such events and such partnerships globally, and exchange know-how, and have also entrepreneurs visiting other countries when we were able to travel again, but have that global level of reach, because all these are global elements. These are global business models.
Exactly. And this is what we're trying to do in Visa Innovation Program, with interconnectedness, collaboration, scalability. It matters a lot, everything that you said. I would like to thank you both. Thank you, Vicky. Thank you, George. Thanks, everyone, for joining us. And let's keep in touch, and we'll have more to discuss for sure on these topics in the future. And let's stay connected also, through the programs and all these nice things that we're organizing. So thank you all, and we'll be in touch virtually for now.
Thank you very much.
Bye-bye.
Thank you.
Thank you.
Bye-bye.
Bye-bye.
Stay safe. Bye-bye.
Stay safe. Yeah.